Trading options to $100, is it possible? So my investment of $1,528 into American Airlines call options has given me a negative return of 45%. Basically, I'm down $696 on this position. And these calls, these American Airline options expire on June 20, 2025. So I have plenty of time until American Airlines can go back to like this range around the 14 or possibly the 13 range level, right? And do I think, can I make the comeback? Or can I reach, $100 trading options? I feel like it can be possible. It's that I feel like you should do it with, with profitable companies, not so much with like shaky companies like American Airlines, for example. Their their, how do you say, like their financials aren't good, but I wanted to test the waters with American Airlines, right? And it was basically a very bad idea. And so you can see on the weekly chart right now, it's having trouble breaking the 9-day moving average. You can see on, what is it, 531, it tried breaking it got rejected. On 882, it tried breaking the 9-day moving average, it got rejected. And then this week, 822, right, it tried breaking the 9-day moving average, and it looks like it doesn't want to, it can't break the 9-day moving average. So basically, American Airlines is having trouble going above the 9-day moving average, right? But I want to show you guys a strategy that I've been backtesting, right? And I think I already showed you guys with AMD. So basically, just trading AMD. Okay, so basically the strategy is, right? But just to show you, I used this strategy with AMD and I made $5,557, right? And just to show you the strategy, right? Basically, I use this website called finviz.com, right? I click on screener and I click on where it says market cap. I trade Mega. The only reason I trade Mega, or I've been using Mega for this strategy, is because these are, companies that are profitable, and for sure that, they're never gonna have like problems, in the long run, right? And basically, I clicked on market cap, I clicked on Mega, right? And then I click where it says performance, right? And then I click where it says here, performance year to date. And basically, it's gonna show the stocks from worst to best, right? And basically what I would do, right? Step 1, create like a watch list, right? Step 2, choose one single stock to enter into a position, whether it be, call or put options, right? And then step number 3, let's say, okay, so step 3 is basically to sell when that position is up 10%, or basically if I'm feeling really confident in that trade, right? I basically try to sell it when it's up 15%. But if I'm not really feeling like really confident, right, with that trade, I basically sell out that position when it's up 10%. Now let's say it's like vice versa, right? Let's say that position is down 10%. That's when I basically enter again. So basically I'll buy another option, regardless if it's a put or call option, right? Basically, I'll buy it on, another option when the position is down 10%. And basically what I like to do is wait if that position turns, it goes down another 20%. So if it goes down, well, if not, let's not say that, right? Let's say the position is down now negative 20%, right? Basically I'll buy another call option, wait it out, right? And then if I start seeing that, that position is down now 30%, right? I'll buy another call option, but I'll just try to wait and see, because usually what happens is that certain stock will try to, I guess you could say, like, I don't know. Basically, the strategy is my strategy is like, if the position is down 10%, I'll buy one call option when it's down 10%. And if the position is down 20%, I'll buy another call option. Basically, that's the strategy, right? That way, I'm not buying like every single time when that position is going down, like each day. Like, I'm not buying when it's down 2%, now it's down 3%, now it's down 4%. Like, I'm not doing it like that. Basically, I'm buying it like, okay, I bought it here at a certain level of support, but now the position is down, let's say 10%. I'll buy another call option or put option when the position is down 10%. And so basically, that's what I did with AMD. And right now, I'm gonna show you guys a position right now, which is Chevron, right? So basically, out this whole list right now, I personally feel like Chevron is my number one pick. And the reason I say Chevron is my number one pick is because if you look at it on the daily chart right now, basically Chevron was kind of trading in this range, or it was basically hovering about above the 180 and 200-day moving average, and it was kind of using it as support for a bit, until like when earnings came out and it completely shattered that little range that was bouncing off the 180 200-day moving average. And so, right, I just waited to see what would happen with Chevron, right? I just waited to see if it would settle down for a bit. And basically, it did sort of settle down. And so what I did was, I basically waited, right? And I was like, okay, I'm just going to wait until Chevron goes above the 9-day moving average, right? And that did happen, right? But you can see when on August 19th, it sort of tried, it tried going above the 20-day moving average. It somewhat got close to it, but it couldn't go any higher, right? And so what happened is that Chevron crashed down this on August 20th, right? And so what I was like, okay, I'm just gonna wait until Chevron touches the 9-day moving average and see if it can like rebound once it bounces off the 9-day moving average. Today that happened, right? And basically on August 22, the high of Chevron was 146.33, and basically right now the position is up 5%, right? But since I'm feeling really confident, right, I'm gonna wait until this position turns 15%, right? Now let's say this position turns down, let's say it's down, I don't know, 10%, right? I'm gonna wait until the position is down 10%. I'm gonna buy another call option once it's down at 10%, right? Once it's down 10%. Now let's say the position is down now 20%, right? I'll buy another, Chevron call option once the position is down 20%. That way I can sort of like dollar cost average in a way, but with options in a way. And so basically, that's the strategy. Basically, so step one, go to finvest.com and create like a little watch list, right, of stocks that you're interested in or you feel like are either overvalued or oversold, right? And then step two, enter into a position, whether it be puts or calls, right? And step number three is to basically sell once the position is up positive 10%, right? And basically if the position is down, let's say it's down 10%, I'll basically dollar cost average. So basically I'll buy a call option once the position is down 10%. And if the position is down 20%, I'll buy another call option once it's the position is down 20%. And basically I'll just try to dollar cost average, right? That way when that certain stock, right, does decide to make a big move, whether it be on the, to the upside or to the downside, right? Basically, I'll basically like, how do you say? I'll basically recoup that. Like, let's say I bought at the high, right? I'll basically recoup that loss that I bought at the high, and I could sell that option that I bought at the high for a loss, right? But I won't really sell it for a loss because basically I bought, other options as that, as that stock was going down and down and down, right? And so basically, that's how the strategy works in a way. So basically, step one, go to finvest.com and do technical analysis on certain stocks that you're interested in. Step two, enter into a position into one single stock, right? Step number three is basically sell out when the position is up 10%. And yeah, that's pretty much it. I just wanted to show you guys with an example. So that's why I had got into Chevron, just to show you guys like a way to explain it in a way. So basically, I got into Chevron once it touched the 9-day moving average. I was like, okay, let's say the position is down 10%. I'll buy another call option once Chevron is down 10%. Well, once the position is down 10%. So if the position, this one of Chevron right now, or tomorrow, right, is up 10%, I'll sell out basically. And yeah, that's pretty much it. Basically, I just wanted to show you guys that, and that's pretty much it, really. So basically, the position I'm in right now, right, it's not looking so good right now, but I have until June 20th, 2025. Do I think American Airlines can make the comeback? Hopefully, hopefully it can happen, but we will see, right? And other than that, that's pretty much it. I'll see you guys in the next video. As always, take care and bye.